Hello traders, the market is officially back open again, and in this particular video series it's going to be a multi-part series. We're going to be talking about a few different things. We're going to be talking about scalping, how to handle gaps, and also how to apply hedging correctly, or basically buying insurance for your trade. Kind of like what you find in a casino if you're playing blackjack and you wanted to basically protect your investment against the dealer having a 21 and losing your investment outright. Also, we're going to be discussing dealing with super news events, like what caused this gap that you're seeing on my charts here. So what I did was I went on ahead and posted some information in my group and on my profile on Facebook to get some feedback from some of the users and members on what they thought about the particular chart pattern. And then what's going to happen is we're going to go ahead and go into detail about how to go about placing trades on this particular type of setup. So I'm going to stop here for now, and I'm going to go ahead and go back to my system, Octave, and I'm going to go ahead and take some look at the data that it's displaying for the current market conditions, and then we're going to navigate and go from there. So right now I am interested in taking a position, and what I want to do is I actually want to go short on this particular market. Yes, the textbooks say the gap is going to be filled and the price is going to go back up, but right now, based on everything I know about the market, based on everything Octave is telling me, there's a possibility that it's not going to happen right now. So now what I want to do is I want to basically define the current channel that I do see. So what I'll do is I'll go ahead and draw me a trend line. Right about there, and I'm going to go ahead and add one more for the bottom here. Now, one of the methods I'm going to show you, which is how to buy insurance on a position if it goes against you, and basically turn a negative trade, or should I say a drawdown in your trade, into a profit. But I'm not going to go to that step just yet unless I actually have to. The next thing is, know what your maximum lot size is for your account. So what's the maximum you can open percentage wise based on the total value of your account? Once you figure out what the max lot size is, don't open the max lot size. Open up a fraction of that, so that way you can do dollar cost averaging to average your average position and make it a better entry. I'll explain a little bit more about that later. So what I want to do now, because right now I know I can open up safely a max size of say 10 lots, but I'm not going to do that. Instead, I'm going to open up a fraction of that. So I'm going to go ahead and type this in, and because I know we're buying right up here in the channel, and also since I know Octave has swung back in the range to the 65 here, I just want to go in for a quick scalp. I'm looking at the halo, it's less than 100, it's still under 75, so I know this is a ranging market. Okay, so I have my trade open. And what I'm doing is I'm going to basically shoot for just a few pips, nothing crazy, but at the same time I know I'm trading in the main direction of the main trend, which is still down. Yes, it says do not trade because this is not an official trade sanctioned by the Octave system. This is a manual trade, so of course it's telling me do not trade, and it's telling me for a very good reason. We have this huge gap here, we have the market all over the place, so from a safety point of view, the system is correct in its decision to tell me do not trade. However, me being a more aggressive trader, wanting to go into scalp, which by the way I do not recommend scalping, but I am only doing this video because I know a lot of you want to scalp and still attempt to scalp. So therefore I'm going to make sure you have the best information possible so that if you do engage in scalping, I know you're doing it correctly and very efficiently. And that's what this is all about. So I have the trade open, and what I'm going to do is I'm going to sit back, we're going to let this trade go for a while, and then we're going to go back and check on it again. Okay, so I let a little bit of time go by, and now I'm coming back to check on our trade to see where we're at. And currently it's up between $350 and $500. Now, the reason I took this trade is because we had a gap, and what I did was I mapped the average of the highs and the average of the lows to establish that there indeed is a channel here. So what I did was I took a scalp trade at the top here, which is almost like a triple top, and went on ahead and wrote that down. Okay, in this installment I'm going to show you how to scalp the markets, but also how to ensure your trades in the event your scalp goes against you. And I'm going to show you how to basically buy insurance on your trade so that way you can make money if it goes down or up at the same exact time. And also lock in your profits if you don't really want to take them right then and there, but you're not sure which way the markets are going. There's actually a way to freeze it and hold it in play. So what I'm going to do is I'm looking at my halo, which is still extremely low. It's less than 100. And I'm looking at my octave bar, which is sitting at 89. And also keep in mind that there is some news that's pending. So what I'm going to do is I'm going to go ahead and open up a trade based on this information. So I bought in right about there. Now, what I want to show you, depending on how this trade goes, is that I can also make money even if it goes against me. What I do is, like right now I have a buy, but if for some reason this trade starts to go against me, like say down to 139.17, or I see that my halo bar right here, which just dropped below the 77 threshold, instead of me jumping out of my position, what I can do is, since it's sitting below 77, I can go ahead and insure this trade, so that way if it stays below the 77 threshold and continues to go against me, I'll make money on the way down. So what I'm going to do is I'm going to let this market tick back up just a little bit more, and then I'm going to go ahead and insure this position. So what I want to do is I want to make sure when I open up the position, it's going to be the same exact size as my original position, just in the opposite direction. That is all I'm going to do. So right now I have a buy at 2.50. So now what I'm going to want is a sell at 2.50. Okay, so now that I've opened up my reverse position, my trade will not go higher or lower in the floating profit loss down here, but what will change is the value of the individual positions, whether they're long or short. Now, what this does is this buys me time to go back and reevaluate my trade. I can even walk away from my computer if I want to, and I don't have to worry about coming back to any surprises, because no matter what happens when I come back, I should still be in the same position, which is what you see here, which is negative 145, give or take the spread differences. So I'll let that sit, and then what I want to do is go back and look at my charts, and then that's when I realize I took a risky position because where I bought at originally was at the top of a channel. So there's a good possibility that this channel could stay in play, which means this price could actually swing back down to the bottom of this channel here, which is about 100 pips back down. So what we're contemplating is this going to break up or is it going to break down? If it breaks up, all I have to do is close out my sell side, and then I can continue riding this move up. However, if I see that it's starting to break back down again, I can go ahead and close out my buy, keep my sell position, and go ahead and continue to make money on the way down. Now, the other thing to keep in mind is that what I'm waiting on is for the octave bar to get strong again. So if I see the octave bar start to go and trend back over 80, 85, upper 90 range, then I'll go ahead and close out my sell position and continue to ride in the correct direction that the octave is telling me to go in. Okay, now that the market's moved down a little bit in the opposite direction, and we basically had a continued pullback on the halo, instead of me taking a drawdown on the halo, I basically ensured my position that if it went against me, I would make a profit. And as you can see here, I have a profit of close to $200. So instead of me taking a drawdown of 200, I profited 200. And as you can see here, my continued floating negative balance is still in that ballpark that we originally had, give or take a little bit. So now what I can do is I can go ahead, and because we're at the very lower end of the spectrum here, I can go ahead and close this position, take a profit, and naturally let the market drift back up. Or I can then engage in dollar cost averaging, because now not only did I just make a profit of 200, okay, I close that out there, but now I have 200 extra I can risk on this particular trade to continue doing my dollar cost averaging. So what I'm going to do is I'm going to go ahead and open up a new position down here at the bottom of this, and that just brought my average buy-in rate, which is up here. Now it's roughly right around here in this middle center here. You see what I'm saying? So now what it takes for me to break even on this particular trade will happen even quicker on the way up. Now, if for some reason the octave shows me that we continue to drop in the yellow, all I have to do is basically reinsure my trade again, and that'll prevent me from having further losses. And instead of having a loss or a drawdown, what I'll end up achieving is more profit. So what I'm going to do is I'm going to go ahead and make a notation here that the market at this particular point was a 43 and still an uptrend. So basically I'm buying at the very lower end threshold of what represents a stable buy market still. And we'll just go ahead and keep an eye on this, and we'll go ahead and write it back up. So what I'm going to do is I'm going to zoom out just to look at where we're at one more time. We're still at the upper threshold of the channel. As you can see, the price has been bouncing off it, which is resistance, but eventually if we break through this resistance will turn into support. Now what I can also do is I can also eyeball a secondary channel, which I'm seeing showing up right about here. What I'm doing is I'm looking at the last spike candle that happened here, and then we have our tweezer top sets right here. So for this particular part of the trade, which is also still considered a scalp, I'm looking to take profit anywhere above this break-even line right here. Okay, I made a quick adjustment, and the actual breakpoint even is 139.16. So go ahead and wait for that to materialize. Now what I could do is I can walk away from my computer if I wanted to, and I could set a stop loss, and that stop loss would say if I lose 2% of my account, take me out. Or I can say if I lose 1% of my account, go ahead and protect this position so I don't reach my 2% stop out level. So instead of losing 2%, what you can do is say once I lose 1%, buy my insurance on this current position, so as the market continues to drop, I start making money. So what happens is you're down 1% in drawdown, but then you pick up another percent in the opposite direction, which effectively makes you break even on that same exact trade without saying you're right or wrong. You just break even. So right now we're at the bottom threshold of the octave bar, which was right at the very edge of the yellow. Now we're starting to slide back up the green. So this is a good thing because now we tried to get good timing up here. The timing wasn't the best when we put the original buy, so we put our insurance in, and as it fell down, we collected 200 on the way down. Now that we got to the bottom of the range and we're looking at our octave, it looks like it finished falling down. Now it's starting to climb back up. We go ahead and put our position in, which now effectively is basically buying into the move, and we're spreading out our risks. So now we have a better average entry. Instead of having an average entry, which is way up here at 39.22, we've now lowered it down to 139.16. So now all I have to do is go up 6 pips, not to the original, but just 6 pips, and I break even on this trade, which gives me the option to just close out the trade and walk away from it. Or I can now try to cash in on this move on the way back up and make even more money next time around. Very simple but highly effective strategy to preventing drawdowns. I know a lot of people sometimes say, oh, I had this crazy drawdown, what do I do? Well, turn your drawdowns into profits. That's what you can do. That's a viable option you can do. So I'm going to let this run, and we'll come back and check it, see where our profits are at, see what we have to book, and then we go from there. Okay, we seriously cashed in on this particular move here. And what I'm going to do now, I'm going to go ahead and start looking to book some of the profits on this particular move. We'll see if we can squeeze out a little bit more on it. Alright, I think I'll just take the money. Okay, so we made 200 going down, and then we made another 800 going back up. Effectively, giving us $1,000 in realized profits while still maintaining a low drawdown, minimizing our risk as needed. So now what I want to do is zoom back out and take a look at my charts, and what I now see is that we indeed did break through the resistance level, which according to textbook could turn into support. So now what I want to do is I want to go back into this scalp carefully and reestablish a new position, but like I said, carefully. So what I'm going to do is I'm going to actually trade with less, because a move like that, you should have reached your 2% goal or your 1% goal. So there's no reason to really get back in there and try to load the boat. So I'm going to look at my octave, and I see that my halo has gone through the roof, and my octave bar is now reading 100. So I'm looking for a good place to re-enter at. So basically we're on top of the channel now. So what I'm going to do is go ahead and establish myself a very small position, and this time I'm doing less than half. That way if this pulls against me one more time, I can go ahead and add a little bit more down here before I have to start looking for the option of taking some insurance on this particular trade. So let me go ahead and stop talking and actually go ahead and place the ticket. Okay, we're in. And we'll go ahead and let this sit, and then we'll come back and check on this. Okay, a little bit of time has gone by and we're still in the same current trade. Now what's changed is the octave bar has actually dropped below 77 threshold, and the halo is still sitting over 100. So now what that tells me is, plus the fact that there's news pending, is that this price can continue to fall and go against me. So now I got two choices. One, the halo bar has dropped below 77 and I exit the position. B, I hold the position and end up getting a larger drawdown. Or C, I go ahead and ensure my position that in the event it continues to fall, from that point on I can just break even, but I stand to make a profit by closing at the bottom of whatever this move could potentially be and going ahead and riding it back up again. So those are just some of my choices. So what I'm going to do now is I'm going to spread my risk first and add me a position here to bring down my average entry, which so far is 10, which means it should lower it by 5. So on the next dip down, what I'm going to do is I'm going to go ahead and buy in. I'm going to put in 1 because I bought 1 up here, so I'm going to buy 1 down here. Okay, so I have my new position. Now in the event this continues to fall and work against me, I will go ahead and ensure my position, which in this case means I'll be opening up 2 in the opposite direction. I'm still factoring the fact that we have broken against this line here when we made this new high, and then we temporarily went below it. But since I have the ability to insure my position, I can theoretically get more aggressive on my holdings, because if I am wrong and my timing's not where it should be at, just insure the position. And that basically freezes my losses dead in their tracks. So I'm going to go ahead and sit back and we'll watch just a little bit longer, and then we'll go from there. Some news coming out, which is coming out on the horizon, this new set of news. So what I'm going to do is, I don't want to take the risk and I don't want to close out my position either. So what I'm going to do is, I'm going to go ahead and insure my position, so that way no matter which way the news actually swings the market on this particular leg, I'm going to secure myself where I don't take a hit, but at the same time I'm going to set myself up for some profits. So I'm going to go ahead and get my ticket up so I can go ahead and do that. Okay, because I did averaging for my position and I bought down here, this helped close the gap on how much was necessary for the market to go higher for me to break even again. So I have a loss of 39 on this one, and I'm up about 20 on this one, which leaves my overall negativity, floating profit loss, down. So let's go ahead and protect this. And no matter what happens from this point on, my losses aren't going to go catastrophic. Neither is my profit going to go astronomical either. It's just going to kind of sit in the middle. As you can see, the price is going against me now. But as you can see, my profit loss is relatively stable. So now I have nothing to worry about, and I can go ahead and let the news hit and let the markets do what they got to do and swing in whatever direction they got to swing in. I see the price dip back down to 50 again. I think I'm going to go ahead and book that as a quick profit. Being opportunistic, I went on ahead and booked some profits that were on the long side and then flipped that profit around for another sell. One buy, and I have 3 sells open. So when I open up my next ticket to make sure this all breaks even, I need to make sure that it's counterbalanced correctly to make sure I have both sides insured, so that way I don't have any surprises on the losses. So in this case, I have 3 for sell, 1 for buy, which means I need to set my ticket up that in the event I need to balance things out, I need to open up 2 more buys. That will equal 3 buys and 3 sells, and that keeps everything even. Overall, the halo average has stayed below 100. I mean, it's went above, sporadically and randomly up and back below again, but overall, dominantly, the halo has been staying progressively under 100. But I am quite sure that's going to change when the news does come out shortly. News is about to hit in about a little over 2 minutes, in a few seconds, and we'll have our market reaction, and then we'll manage our trade from there. I'm going to go ahead and start booking a little bit of profit. And I'm going to go ahead and get ready to hedge the rest of my trade and insure it, and then we'll let the rest of the market reactions filter through, and then we'll go from there. What I decided to do based on the real-time market conditions is I went on ahead and flipped my trade around to reflect what Octave is saying, which Octave Halo bar has gone over 100, 134, and the Octave bar is still holding in the higher upper range between 91 and 100. So at this point, instead of just ensuring my trade to break even, I'm just going to go ahead and go with the system for the main direction and spread out my risk, of course, by having my position open here, and then I had another position open down here. And because I can insure my trade, I can actually go a little bit more aggressive and open up one more lot. If we happen to trend back down to this level again, I'll go ahead, like right now, and I'll go ahead and place me a trade right there. Now, for me to ensure that I don't get a further drawdown or loss, I have to keep in mind that I have 3 buys open, which means I need to insure myself with 3 sells in the opposite direction to prevent myself from getting a very large drawdown. So for now, I'm going to keep this trade open. I'm going to let the news do what it needs to do, and I'm going to continue with the overall projections on Halo, which is, as of right now, still showing an uptrend. Now, if that deteriorates any worse than this, then I'll go ahead and once again insure my trade, so that way I can start locking in profits in the opposite direction. And this is scalping. It gets complicated, but if you do it correctly with these steps, which it takes a little bit of practice, I recommend you do it on a demo account. You you could become a lot more proficient at it and take out the risk. Not 100%, but severely limit the amount of downside risk you're going to have on any particular move. If for some reason your timing is not the best timing, it's okay. This allows you room for error to slide things around, so when the things come back in your favor, regardless of which way it goes, you still make money. Okay, we're going to book a little bit more profit. What we did was, when we measured the halo when it was down in the negative side, it was still not over 77, which showed we still had continued weakness. So that's why I went on ahead and bought a little bit more at the bottom, flipped my sells around, cut them, and went on ahead and went for the long hauls. Now at this point I have so much profit built up. Last time I checked, we're probably close to $1,500, a little bit more than that for this particular trading session. But I can go ahead and let this just pretty much run, because I really have nothing to worry about because I have so much profit built in. I could just go ahead and let this one little ticket ride, and if it falls back down again, I could just rinse and repeat this whole cycle over again. And that's basically how I like to scalp, where I keep it low risk, and I can go ahead and get in and capitalize on both sides of the moves continuously as the markets progress. not worrying, did I get my timing right, or do I have the right lot size, or am I staying within my money management rules, because I'm keeping my risk to a minimum and in check, because when I'm not sure about something, I just ensure the positions I have open, and then when those positions become profitable, just go ahead and lock them in, cash out. But always keep in mind and reference what the halo is doing and what the bar is doing at any given time, so that way you know that your overall direction expectations are correct. Again, I do not recommend scalping to anyone. However, if you're gonna scalp, I'm making these videos for everyone, for the general public. That way you do it responsibly and keep things within check, and you take the proper steps to ensure your profits and protect your account from any kind of devastating loss, because you're holding open a position that's going in the wrong direction, causing an extreme negative drawdown, which can be prevented by insuring your trades. I'm going to go ahead and close down this final trade. So now I'm completely out of the markets, and that completes my tutorial on how to trade and scalp the markets no matter which way they're going. When they're flip-flopping, you got a bunch of zigzag, because sometimes I get people that are saying, hey Jeff, you know, 1 minute it changes this way, another changes it that way. Well, there is a way to handle that, and as you've seen in this video series, it's totally doable. As long as you got Octave, and like I said, you know what the halo is, you know what the bar is, you know what the general direction is. Doesn't matter how many times it switches, what you're looking for primarily, are we above or below the 77? Because that's kind of like the line in the sand to give you a heads up that says, hey, there's a lot of weakness here. And the fact that we have the Octave bar to let us know that, okay, there's weakness here, and it's switching back and forth, which means it's not going to go very far. Get in there, make a bunch of money, take all your trades. You know, if you got to go up, down, do what you got to do, pile it up, but keep in mind how many lots you do have open. That way you can counterbalance it and stay profitable. It's not that hard to do, but it does take a little bit of practice. So if you're going to engage in scalping, you need to learn how to do it like this. You need to know how to do it right, which means you need to practice on demo account first until you get the mathematics correct and you get the concept correct, until it's almost like muscle memory. And then you'll have a very, very effective tool for getting in and out and keeping your risk down. So until then, do not scalp, people. Wait for system trades from Octave, which are your best trades to take. And when you do take a system trade from Octave, and if for some reason there is a slight drawdown, you can always go in and ensure your trade when you open up a new Octave trade. So that way, if there is a drawdown in your Octave system trade, you turn that drawdown into a profit by simply just insuring your trade, let the market do its little quick reaction, and then when it goes back into the direction that Octave was already originally going, go ahead and collapse your other side, take profit on it, and then let the trade ride out and make your profits. And that way you effectively eliminated your drawdown issue. So until next time, if you have any questions about this video, go ahead and hit me up on Facebook or Skype. If you have any other questions, you know, just let me know. If you like or share this with other people, that'll be great. Get the word out that we do have other content out there, and it could probably help somebody else out that might be struggling with their trading as well.